Imbibe. The ninth best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Moffett-Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing two-thirds of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we saw in Warner Bros. Discovery or Tesla.
This is going to be for the record, and maybe something not unexpected. The FDIC has now put out a release with regard to the now wind down of Silicon Valley Bank. In their news release, the FDIC rather says that Silicon Valley Bank Santa Clara was closed today by the California Department of Financial Protection and Innovation, which appointed the FDIC, the Federal Deposit Insurance Corporation, as the receiver, so the administrator of this now wound-down bank, or the process of being wound-down bank.
Not even the Fed knows what happens when the most important bank in Silicon Valley gets seized by the FDIC, as was what happened today. Yeah, we left here with no real idea. Will there be contagion? Could this be an outlier? We just don't know. At first blush, there was some strength to the market, with the weakness contained to the banks and techs, as in which bank's the next to fall and which tech stock's going to get hurt because it has money there, which startups will be crushed. I mean, hey, look, we just found out this evening that Roku had 26% of its considerable $1.9 billion cash hoard with this company.